Okay, folks, welcome to Best Stock Charts for the coming weeks. For non-members, please enter your email address. We'll get these videos out to you each week along with a couple of trade tutorials. Members, we're going to segue into the week ahead commentary immediately following Best Stock Charts on this very same video, so stay tuned. What we're going to do first is we're going to kick off Best Stock Charts with a couple of, actually three trades that we closed out last week. The first one up is TLYS. We shorted TLYS. It was an extreme overbought stock. Rallied up to RSI over 90, pulled back, rallied back, putting the lower high on RSI. We got aggressively short back here, doubling up our position. Then on the 20th, it got hammered very, very hard. It closed down over 12% on the day. Intraday, probably down 13, 14% before it rallied. We knew that there was support down here, so we were poised to stop out of the trade, book our profits, move to the sidelines, and sure enough, that's what happened. I mentioned on Best Stock Charts last Wednesday, which is still posted on the blog, that it was no shock that we got a rally higher, but I didn't expect this to go moving up to higher highs, that we would probably move sideways with a bias to the upside and then roll back over again. And pretty much what happened, we rolled back over, we retested the lows of the week, and my guess is that we consolidate a bit further, and then really the test is at the top. Either we're going to break out or break down. I think that given the overbought condition on the weekly chart, that we could still see some pressure to the downside. We did close at support at 9.50. Volume rose to above average. But TLYS was a good trade. We made a nice profit with only a few short trading days. So this is off our watch list. I don't think that we'll be looking to short it again. However, I will be looking to buy it if we pull back to this support level here. Because take note of the macro view. Again, this is a weekly chart. We had a double bottom setup. It rallied up and through the pivot point at 8.72. Shorts got killed. And plus you had institutional accumulation. It's due for a pullback. And these usually come in threes. 3 days of a pullback, 3 weeks of a pullback. Expect a pullback and a retest of the support level. That's a good thing. It allows you for a very, very good risk to reward entry point. And then you could look to get long. Members, if we decide to get long, we'll be sending out a trade alert as we will on all of these charts. BRZU. We got long of BRZU a number of months ago. BRZU puts you 3 times long of Brazil. And we got long down here when nobody else wanted it. We began booking profits several weeks ago, and on Friday, we closed out the position. Why? It's because the dollar was fairly flat on Friday, yet BRZU closed down over 3.5%. That's a concern, especially after we flashed a hollow candlestick, which is a sign of indecision at the top of a trading range and at resistance. So I use the thesis, first out, best out. Move to the sideline, watch for the dollar to break. I'm going to go to a chart of the dollar in a little while, so stay tuned. If the dollar breaks, we'll be looking to get long of BRZU once again, either on a pullback or on a breakout. And yes, that might mean that I may have to pay up to get long of BRZU once again, but at least I'll know that I'm buying on strength and that the path of least resistance is to the upside. Right now, who knows? We may break out early next week, or we could quite possibly break down. I don't know. We use a rules-based approach, meaning we buy on strength, we buy at a support level, one of the two. And it's not there yet. It's in no man's land. So we remain bullish on BRZU. Take note of RSI making lower highs. That's not good. We'll keep an eye on it. We'll be looking for breakouts either on the indicators or on price. LABU. We bought LABU back here on the 13th of September. We made about $11 per share within a few short trading days. I mentioned on Wednesday's Best Stock Chart, still posted on the blog. You can go see it. You don't need to be a member. That we would probably see higher highs after it flashed a bullish key reversal. That's what happened. However, on Friday, it flashed a bearish key reversal, and it'll probably pull back and retest the breakout point. So I'm bullish on LABU, looking for a pullback and a retest of this support level. Hopefully we get it. We'll be long once again. Members will send out an alert. Other stocks we're watching, IMPV, daily chart, rallied up and through its third standard deviation Bollinger Band. It's not supposed to be there. We're going to get a pullback. Volume was very strong. We could rally all the way up to $54 per share, maybe $54.50 before we get the pullback I'm expecting. And the last time we saw that resistance level tested was back on January the 27th of this year. So expect a pullback off of that resistance level, and we may short it as a short-term scalp. Otherwise, I'm bullish on the name. Weekly chart. Weekly chart, we were in a pennant formation. We broke out of it. And there's a lesson to be learned from this chart. If you step back, take a look at the higher level view. You have a head and shoulders setup formed. Left shoulder, head, right shoulder. And this is where a lot of the newbie technicians make mistakes. They'll short a stock simply because it has a really detailed head and shoulders setup. And in their heads, they're saying, how can I go wrong? I'll short in advance. I'll be the smartest guy in the room. Only to see that you get whipsawed out of it. This head and shoulders setup, for the most part, is now negated. So the lesson learned here, wait for the break below support, that neckline. You'll be best served by waiting for that break. As it stands right now, we have a rally on a weekly basis. What were we up? Almost 19%. Higher lows on RSI, breaking out. Same thing on stochastics. Longer term path of least resistance is higher for IMPV. I'm looking for a good entry point. Members will look to get long. Fred Zinc, FRED, the symbol. This was an extreme oversold stock. I mentioned this on Best Stock Charts last Wednesday. We had RSI trading down below 20. That's been resolved. That's above 27 now. Stokes, I mentioned, had broken out above this resistance level, and we had follow-through on price. So here was Wednesday's price action. Good follow-through on price. We broke out above the upper band of resistance. So these shares can be bought two different ways. One, if you get a gap higher on Monday, you'll want to wait for a pullback and a retest of the breakout point. Or if we break down, and this breakout point is right here, what was resistance should now act as support. Now, if we break back down into this trading range and you bought above this upper band of resistance, you need to stop out because you're going to see the price come all the way down to this lower band of support. That's where I would buy next. And I certainly wouldn't hold the shares I bought here to buy more down here. I would stop out, then get back in at a lower price. Volume declined on Friday. Let's take a look at the weekly chart. Now, the weekly chart, you could see that we held support found the prior week. So this is good support here. And if we break down below last week's lows of 9.29, we're going a lot lower. So, lesson to be learned here. Know that you have support below. And if it breaks, get out of the way because there is no historic support below to help guide you to where there might be buyers to help lift the stock. We are at levels not previously explored. Volume is still very high, institutional distribution, so there is still some risk to the downside. So Fred is looking good. I'm looking for some backing and filling on FRED. If we rally, pull back, retest the breakout point, that would get me excited. It's very similar to what we did in our recent trade of LABU, meaning it rallied on the 12th, then pulled back, retested this breakout point on the 13th. We got long. It closed down on the day. That didn't prevent us from getting long because all I cared about was the successful retest of support, and we wanted to make sure that what was resistance on the 9th was now support on the 13th, and that's what happened. I'll be looking for the same thing on FRED, very similar. Next chart up, Noodles and Company, NDLS. This is a new one for us. This chart has no historic support below. Now, on a monthly basis, the shares are trading down below the lower band of the declining downtrend channel. We are very close to a buy point on this. This is really distribution, panic selling by those who just want NDLS off of their books, daily chart. On a daily basis, we have RSI 16.34. We as we've seen on the monthly chart, we're seeing distribution take it down. So far, we've broken down below the lower band of support. They tried to rally it on Friday, could not recapture the prior lower band of support. Volume rose. Double bottom setup on Ultimate Oscillator. Double bottom setup on Stokes. I think that we're close to a rally on Noodles and Company. If we rally through the upper band of support, pull back and retest it, and we hold for a couple of days, it can be bought. If they move it down further from where it traded on Friday and even down below 5.15, we'll be looking for a bullish key reversal. For those who are not members and not familiar with what a bullish key reversal is, this is a bullish key reversal as you saw on the 6th of January. More of the classic sense of a bullish key reversal is what you saw on the 7th of January. Traded down only to reverse and close higher. So that's what we'll be looking for. Another push down on NDLS and then a bullish key reversal to close higher. That's our buy signal. So members, more to come. CBI, Chicago Bridge and Iron. I spoke about this on Wednesday's best stock chart, still posted on the blog. Let's talk first monthly chart. I mentioned on the best stock charts last Wednesday that I expected lower lows. We got it. We moved down towards the lows of the month on Friday. I think that we could still head down to this lower band of support. I'm not willing to risk a buy here just yet because I want to make sure that I have an edge over other traders. What's that edge? It's the knowledge that I am buying where there are other technicians out there willing to step in and buy shares. That common ground is right down here. And members, we'll talk more about this either on Morning Update on Monday, Tuesday, or on Market Wrap. So we're close to a buy point, not quite yet. Now, daily chart. And this price action is very similar to what we're seeing on NDLS. Really quick, we'll go back to that one. NDLS broke down below the lower band of support. So did CBI. Broke down, then rallied back. What we're looking for here is another pullback and a successful retest of this breakout point, because we know from Friday's price action we have resistance up here and they're selling into strength. So even though we're still technically oversold, not enough. I think it goes lower. So CBI looking interesting. It's not ready to be bought just yet. Apple. All right, so Apple I spoke about on best stock charts last Wednesday as well. We were trading right here. We reversed off the lows of the day on Wednesday. And I mentioned at that point in time that there were a lot of talking heads simply because you had a couple of days of a pullback on Apple. They were deeming it dead man walking. And I brought to the attention that the shares had rallied significantly up and into the third standard deviation Bollinger Band and had to pull back. And that this price action was quite bullish. We're holding support. That's changed. I did expect a rally, and we got it. We even broke out. And that's where the problem is. We broke out and then reversed on Friday. We couldn't hold the breakout point. So while I was optimistic here, on Wednesday, I'm now far more pessimistic. I wouldn't short it. I wouldn't buy it. Because as I teach members, when you have a breakout point failure, as we saw on Friday, meaning we broke out above resistance and then broke back down, the probability of us retesting support is almost guaranteed. There is a very significantly high probability that we break down below support and move lower, which we did on Friday, only to reverse and recapture support. I don't think we're out of the woods yet. I still think that you have more sellers above. And when you take a look at the weekly chart, which I reviewed last Wednesday as well, I mentioned that you have resistance above. Those sellers who held through this downturn want to get made whole. It's psychological. It has nothing to do with the fundamentals of the company. People back here got clubbed like baby seals. They want their money back. It's as simple as that. So they are selling. The best thing that can happen for Apple is that you see a bull flag and then you see a breakout. So I'm not ready to call Apple done yet with its rally, But for the short term, it's a watch because back to the daily chart, because you want to see either a breakdown or a breakout, one of the two. This situation is a big question mark, 50-50 chance it goes in either direction, and those are bad odds for me anyway. So I'd rather be a spectator, sit on the sidelines, and see how this thing resolves. Because as it stands right now, if you don't have a position either long or short in Apple, this is somebody else's problem. Let them wait to decide whether or not they should buy or sell. Right now, you're sitting on cash, and you don't have to do a darn thing. Wait for it to break out and buy on strength, or pull back and buy at a support level. Simple as that. Members, I'll send out an alert if and when we make the trade. All right, we're going to talk commodities now, but first, we need to always talk about the U.S. dollar. Why? It's because commodities are priced in dollars. And while the Federal Reserve was as dovish as they could be on Wednesday right here, and the dollar corrected, we did close off the lows of the day that day. And volume was not high. It was low. And I warned about this, and sure enough, on Thursday, we had a reversal day, but Friday, hollow candlestick on very light volume. So this brings us to a weekly chart. On a weekly basis, the week of September the 12th, we broke out. Then last week, we broke back down, breakout point failure, or what I like to call a bull trap. And as I just mentioned on the chart of Apple, the probability of us retesting this support level, the lower band of support, is very high, almost guaranteed. Now, there's also a significant chance that we break this support level and move lower. The last time we had a breakout point failure or bull trap was back here. The following week, breakdown, and we retested the lower band of support. We've rallied back. Now we're beginning to put in lower highs. I'm expecting more weakness on the U.S. dollar. Therefore, I'm bullish on commodities. Note the double top setup on Stochk RSI and lower high. Same thing here on Williams percentage R. Volume to the downside last week was high. Now to Treasury protection bonds. I watch these all the time because they trade in tandem with commodities, gold in particular. So the tips last week rallied. Why? It's because there's inflation. People buy tips because they want inflation protection. This is the market saying, no, Federal Reserve, you're wrong. Inflation is not stagnant and almost non-existent. We live in realityville, not in academic land, where everything is calculated on an actuarial table. The tips are telling you there's inflation. They want to move higher, weekly chart. And we're looking to get long of the tips. Now, on a weekly basis, and over here in gold line chart is gold. You can see how they trade in tandem. So, last week, we recaptured prior support. Big up week last week on the tips. No breakout yet. I'm not ready to buy until we get a breakout or a retest of the lows. One of the two. RSI is hooking up. Very similar price action on the chart of gold. I'll get to a candlestick chart in a moment. But gold is looking good. So we are flagging out on both gold and on the tips. I think that they break out, especially if the dollar corrects. Because when the dollar corrects, that's inflationary. Now for the chart of gold, weekly chart. You can see that we're in a bull flag formation. The gold stocks, the miners, have taken it on the chin a lot harder than what the GLD has. We are poised for a breakout. I think we're going to get it. The Stochs are hooking up, as is RSI. Or I should say the Stochs are poised to hook up. RSI is hooking up. So while I'm not ready to buy yet, I would buy on a breakout or on a retest of the lower band of support. Volume was average last week. So we like gold. We'll be looking to buy. Monthly chart of gold. You can see that we bounced off of the lower band of the rising uptrend channel. Folks, if you listen to these talking heads on CNBC or bloggers, they're out there saying the gold rally is over. No way. This is the value of using multi-period charts. we had a correction off the highs. Why did we have a correction? It's because we hit resistance. We pulled back. Where do we find support? Off of the lower band of the rising uptrend channel. The bull market in gold is still alive and healthy and poised for a breakout. And once we hit 131.15 and close above it, we'll go into 137.55 in a heartbeat and then 140. So gold, very bullish on. We're already long of the gold mining names. We'll be looking to add gold as well. Silver, daily chart, a bit noisy here and volatile. So we're going to go to a weekly chart in a moment to smooth out the noise. But on a daily basis, we had a hollow candlestick, a sign of indecision at the top of a trading range. Concerning. The last time you saw that was back here at the top of a trading range. What did we get? A pullback. Expect the same thing. We must hold 1760. I don't think we're going to get down that far, though. Take note of your Stokes, putting in a higher low. Good stuff. Both lines above the 50 neutral level. Good stuff. Volume light to the downside, bullish. Let's go to the weekly chart. Weekly chart, we're in a bull flag formation. We bounced off of the upper band last week, but we did close above the 200 period moving average. Volume on a weekly basis was about average. The Stokes are beginning to hook up, bullish, possible, just possible double bottom setup on Williams percentage R. So I like the chart and a double bottom setup on RSI as well. So silver, bullish on. We'll be looking to buy some silver or add to our silver position. We are already long of a leveraged ETF. TZA. All right, so I'm keeping a very, very close eye on the overall markets. While the markets had every reason to skyrocket last week, they didn't. They gave up a lot of their gains, if not all of their gains, seen after the Federal Reserve announcement. And I thought it was quite dovish, their statement. So the fact that we couldn't rally is a concern. You need to remember that we are in an earnings recession and the macroeconomic data is weakening. While I read into the fact that, I read into the statement that the Federal Reserve was even more dovish and accommodative than they ever have been in the past, I don't believe that the markets have discounted a December rate hike. I don't think that they believe that it's off the table. I believe it is. I could be wrong, but as the economic data unravels between now and December, and it comes out weaker and weaker, you're going to see them discount the December Fed rate hike. If it comes out stronger and stronger, the Fed rate hike becomes a probability. So the jury is out. There's a lot of indecision. The markets don't like indecision. And therefore, in times of indecision, the path of least resistance becomes to the downside. I'm not ready to call the bull rally over yet, but I'm keeping an eye on getting short of the market. And we already have a short position on China. We've already opened up that position. We'll look to add more. Not quite yet, though. Members will talk about that later on. But the TZA daily chart, we broke down, obviously, out of this pennant formation. On Friday, we had a reversal day. Volume was light to the upside. Stokes are weak and could get weaker. We may fill this gap next week, but I think we may roll over. Weekly chart. All right, so we had a breakout on RSI rolling over now. We'll see whether or not it retests the breakout point and then bounces off of it to move higher. That's a possibility. Now, the problem I see here, first and foremost, with the TZA is that it closed down below this lower band of support. That's not good, and it did so on big down volume. So you had institutions selling shares. So you don't want to fight those guys. Now, on the bull side, we had broken out the week of September the 12th on Ultimate Oscillator. We still held the breakout last week. So a bit of a divergence. We broke out on Stokes the week of the 29th of August, and we're holding that breakout point. We could roll over and put in another lower high. I'm not going to be satisfied with these Stokes until we're trading above this pivot point here, last seen the week of June the 27th. So TZA is a watch for us, and once I see this market begin to crack, we will be buying TZA fairly aggressively. Okay, members, what we're going to do now is we're going to segue into the week ahead commentary, which consists of member stock chart requests, which is where we review the health of the overall markets to determine what our strategy is going to be for the coming week. How did we behave on a weekly basis last week? Because a weekly chart filters out all the noise of a daily chart. And that way we can have a better perspective on where the markets will be heading. But before we get into the charts of the major averages and the indexes on a weekly basis, and then segue into our positions and a review of those positions, let's talk first about this chart issued by the Federal Reserve Bank of New York. Now, prior to Yellen's testimony, the Atlanta Fed lowered GDP. Then immediately after the Federal Reserve announcement, the Federal Reserve Bank out of New York lowered their GDP number to 2.3. Another revision. They've been revising this down for months now. So we're putting in not only lower highs, but lower lows. Think about this. They're talking about raising rates in December with GDP falling off of a cliff, with manufacturing being in recession. Take a look at the sectors here. Right here is your graph. Manufacturing, negative. Retail, negative. Everything negative, with the exception of income, which is inflationary. And housing really took it on the chin in September as well. So we are making lower highs and lower lows on GDP. Keep this in mind. We are in a stagflation environment. We haven't seen this since the Jimmy Carter days. We have GDP, which is in essence flat. We have inflation on the rise, in particular housing and in healthcare costs. Thank you, Obama, for Obamacare and the huge tax that's been put on the American people. And not to get political, the Republicans haven't helped push it back either, haven't helped at all whatsoever. So they're all ineffective, all corrupt. I don't care what party they're in. That being said, I digress. So the questions you should be asking now are, Bob, how does this impact the overall economy? How does this impact what the Federal Reserve will do? How does this impact our trading? And that's what we're going to talk about right now, because